Welcome to Saxo Bank's morning call on Monday, the 1st of April. Eventful start to the week, to say the least. We had a bunch of PMI figures coming out from Japan, South Korea, China, and then Russia only less than an hour ago. And all PMI figures surprised to the upside, except for the Japanese one, which was, I think it surprised a little bit to the upside, but the change or the level was still very depressing.
Yeah, and it's quite interesting to see the reaction in the currency market because dollar yen hardly moved on the news. And just thinking back a few years ago, a Hansen miss like that would have quite a significant role. But it does also indicate the balance of power in terms of economics, where they are shifting. It's really all about China these days.
It is, and Japanese equities were up 1.5%. If you go to the slides, you can see here that the Chinese PMI figures, the numbers here. So the biggest move was in the red line, which is new export orders. It actually went above the previous little peak up in January. So and also the headline, which is the yellow line, has turned around. Non-manufacturing, which is the service sector, has been remained elevated, and that has been the case in every single country. So it seems like the manufacturing is coming back. And if you look at the next slide here, which is CSI 300 index futures, so the mainland largest 300 equities in China, up another 2.6%, following on that 4.5% move. The red line is the red line we drew last week on the index, just to sort of set the expectations for a downward move if we went below that red line. The green area is an area we have been highlighted for many weeks in the CSI 3 index whenever we sort of zoomed out. And that's sort of the levels that we were range trading in back in late March till early June. And as you can see here, we're actually looking into a pretty solid breakout. And South Korea, we've been talking about South Korea for quite a while, and it seems like South Korea really again nailed the turnaround in economic activity. And talking about economic activity, we typically talk about commodities. And what are we seeing in terms of action in copper and the sensitive?
Well, we can see straight away that Dr. Copper likes this number because it's alleviating some of the worries about growth and demand in China, and China is obviously a key driver for that. If you look at the chart here, you can see the spike there, which is kind of replicating the CSI one that we moved up, got pretty close to the $3 a pound overnight, coming back a little bit after that. Some profit taking emerging, but at least it's highlighting there's some underlying demand cause of support coming in for copper. I think also worth mentioning that as of last Tuesday, that mini dip we had below 290, as you can see on the chart a week and a half ago, that's basically triggered a complete reduction in the net long held by hedge funds. They went back into a short. So obviously this move we had over the last 3 days has really attracted quite a bit of a scramble to get back into the market. So some fresh buying has most certainly come in, but probably this stage, as you can see on the far left, just above 3, we have some old lows from May and June last year. That's really the key battle area now.
I think there is a general battle going on between the longs and the shorts, and I think in equities, maybe resembling a little bit what we've seen here in copper futures, people are so anxious, so they moved into short position, and then very quickly now they have to maybe cover their shorts because of these very strong PMI figures. Very interesting. If we look at another equity market, just continuing across this theme, German equities has been, and I talked to Kramer about that mid last week, has been one of the weakest equity markets across the board, with its very deep link into Asia and the declining manufacturing space we've seen out of China, South Korea, and Japan. But look at this chart here. I've marked in the green area where the DAX index and German equities in general should trade if they traded one-to-one with the price action in China. So I think it leaves some scope for upside potential in German equities. Obviously, this is never a certain game, but you would imagine that if China and Asia more broadly is actually turning around in the manufacturing space, that Germans' sentiment scores will improve dramatically over the next couple of months. So I think it's worth looking at German equities as sort of a way to get the next leg in this continuous bull market for equities. And if we look at the S&P 500, we had this orange line was line in the sand, which we marked last week as sort of, if we went below that, then the dynamics would change to the downside again. What we're actually seeing here now is the S&P 500 futures are pushing higher, recouping the lost terrain and maybe pushing through those highs from a couple of weeks ago. And if we do that, I think we have all-time new highs in sight within a short time frame. So, but moving to other markets, we have to talk about oil, Ole.
Yeah, because again, with this whole risk on coming back into the market, and I think especially with we've seen this quite a substantial rally we had in crude oil so far this year. What we've seen at the same time is the investor, the speculators have been a little bit more hesitant to break back into the market because of the worries about the macroeconomic growth concerns. But I think with a number like that we've seen from China, then that potentially is adding another scope to the bull run we're having in crude oil. Take a look at the chart here. You can see how we have been hovering around this 50% retracement now for a while. 68.30 has become a bit of a line in the sand. Above that, 70 is the next. It's both the round number, which the market likes, but it's also the 200-day moving average. And just I put in the cut report highlighting the net long in crude oil. While the prices recovered 50%, the crude net long has only recovered 38.2%. So there is probably some additional room to the upside, but we're going to keep an eye on these growth numbers going forward, because that, and obviously also any tweets from Trump, because he tried to talk the market down last week. Clearly hasn't succeeded in doing that. Just a note today, Bloomberg will publish their monthly production report survey for OPEC. So we're going to see whether Saudi Arabia has cut production even further.
It's also worth highlighting that Saudi Aramco, the world's largest oil company, is preparing to offering bonds to the public markets. So they very soon will get their first rating. I think Fitch is the one that is preparing their first rating, 5 notches from the highest level you can get. Rising oil prices, I presume, is a good thing both for Saudi Arabia as a country, but specifically for Saudi Aramco.
It is, and for the government in Saudi Arabia, they need the oil price around $80 plus to break even. So they obviously will continue to try to make it to take it higher. We also have to obviously be concerned that the higher the price go, the bigger the potential risk, growth risk, because it is a tax on the global consumer. So there is a limitation to how far it can go. But at this stage, with the input coming from these rising stock markets, it's a lonely place to be a seller at this stage.
Yeah. Last Friday, Ole, you talked about the acreage that was expected to be planted in the US. You talked about weather patterns and what the impact would be on corn, and we got that report. And what was the price action? It seems like it was a big move.
Well, we did see a general negative reaction to the report on Friday. If you dwell into the chart here once again, I put in a table just to give maybe the numbers a little bit difficult to see, but I highlight in yellow the orange, the two main ones, and that's basically corn. The acreage, the planted acreage in corn was revised higher than what was expected by 1.5 million acres. At the same time, quarterly stocks showed quite a big jump in corn as well. And corn didn't like this report. You can see on the chart that we had a big leg down on Friday. We're hovering above this 355 support area. Generally, soybeans came down as well, whereas wheat was a little bit more muted. But generally, we need bad weather this spring in order to bring down the inventories. So at this stage, the upside potential seems to be limited.
All right, and last Friday as well, we had a big news with the Uber's competitor Lyft IPOing and had its first day of trading, and it was a bit of a circus, I would say. They had difficulties to get the trading going. They had to clear the order book, and I've put a chart here where you can see on a 5-minute bar chart how the trading day developed for Lyft, and as you can see here, we opened up around 87 level, which is compared to the 72 IPO price. And this is, personally, I think this is a disaster when you do an IPO where you just trend higher, because it means that a lot of secondary retail investors that didn't have access to the IPO was forced into very high prices because of a very low offering. I think the float is only around 12% of the overall company. And the price is that a lot of investors and traders have been feeling losses, I think, on this first day of trading. I think clearly now looking back in hindsight, either the offering should have been bigger or the IPO price could have been easily higher. This creates negative sentiment and it creates a negative momentum, and it sort of smells a little bit of previous tech IPOs we've seen before.
How many days before short selling will be allowed?
It's typically available quite quickly for the institutional investors, hedge funds, etc. But for clients of Saxo Bank, the typical it takes 3 to 5 days before we can allocate shares.
So I suppose that will be the first real test. Whether there's actually some prepared to go short into this market.
It will, and I've written two analysis on Lyft, which you can go read on home.saxo. I think the valuation is quite stretched here, but it is on the other hand a company that is growing extremely fast, but it's loss making. It's losing almost $1 billion. So very interesting to see whether this is potentially the new Snap. So we'll definitely come back to Lyft, and if we. To close this off, go into the calendar. It's Monday, so it's a fairly light calendar. We have an extension of the PMI space here with the Eurozone PMIs for March coming in at 08 and 09 GMT. We have some retail sales from February, not that important, but then we have the big one, that's ISM manufacturing for March at 1400 GMT. Very interesting to see whether the US is following other countries out of Asia, sort of leaving this, weak economic sentiment and data behind us. And then we're looking forward for tomorrow's RBA's cash rate announcement. I don't think, you have anything else to mention. Maybe Brexit.
Yeah, Brexit is another crucial day, but I think we almost just have to see the events as they unfold, because the uncertainty is still very elevated. I think just one quick note: we changed the clock over the weekend in Europe and elsewhere, and that basically means GMT is now 2 hours behind CET. So just you have to add 2 hours to the hours we mentioned there.
All right. Thank you, Ole. We'll be back at the same time and place tomorrow. Thank you very much for viewing.